If I would ask you to name the wealthiest person in the world, who would come to your mind first? Elon Musk, Jeff Bezos, or how about Mark Zuckerberg with a net worth of $57 billion? He's not having his best days lately since Facebook's stock plummeted so dramatically. Regardless, it's easy to calculate these people's net worth. All you have to do is take a look at what percentage of the companies they have founded they own, and what is the capitalization of that company. The only problem with that wealth is that it's only on paper and you can't instantly turn it into hard cash. Theoretically, it is possible, but in reality, it is way more difficult than you imagine. Because when investors realize that the founder is massively selling off, that would push investors to lose confidence in the company. The world is filled with millionaires and billionaires, but they don't often display their wealth to the public. Take Peter Thiel, for example. He is known to be a billionaire. At the end of the day, he has built PayPal, was the first angel investor in Facebook, and helped the company to go public and become an icon of Silicon Valley. However, Forbes estimated his wealth at around $2 to $3 billion, until it was leaked that he has used Roth IRA to turn $2,000 into $5 billion tax-free cash. On the top of his known net worth, it seems like he has been hiding another $5 billion. And that is a small example. At least $11.3 trillion is held offshore, according to a 2020 study. That's why the end goal of any tech billionaire is to sell their shares and turn them into cash, like Bill Gates did back before the dot-com bubble crashed, or Travis Kalanick when exiting Uber. The challenge is to sell before everything crashes, when prices are at their peak, and not too early to maximize your profits, and that's exactly what billionaires have been doing lately. Everyone from Bill Gates to Elon Musk to Zuckerberg have been massively selling their stocks in the last few months. So that raises a few questions. Why are these billionaires selling their shares now? Are we on the brink of another crash? And if that's the case, how bad will the crash be? We'll answer all of these questions and many more. But before we do that, give this video a thumbs up and let's dive in. Unlike other tech billionaires, Bill Gates' net worth isn't just on paper. He can turn his $123 billion fortune into cash much faster than any other billionaire, like Jeff Bezos or Elon Musk or Mark Zuckerberg. Most people think that Gates' net worth comes from Microsoft, which is not true. Yes, he made his fortune through Microsoft, but he quickly diversified his portfolio. Microsoft today makes up around 1% of his entire portfolio. One of his biggest and best positions is in Berkshire Hathaway. He owns at least 54 million shares of the company, which amounts to around $11.2 billion. Berkshire Hathaway is a holding company that invests in multiple different companies such as Apple, Bank of America, IBM, GM, Goldman Sachs, and owns entire other companies like Geico or Duracell. Gates owns also 18.6 million shares of Waste Management Inc., which amounts to around $2 billion. But recent reports show that Bill Gates sold almost $1 billion of Canadian National Railway Co. shares, trimming one of the largest holdings and the investment firm that controls his entire personal fortune. He also sold his entire stake in Grupo Televisa, a Mexican multimedia mass media company. Alphabet is another stock that the billionaire got rid entirely in the first quarter of 2022. The analyst noted the firm's search and cloud business saw healthy growth, but YouTube advertising revenue missed consensus estimates for 3 consecutive quarters, with headwinds looking set to continue into the next quarter. During the pandemic, the stock price doubled, reaching its $2,978 per share in November 2021. So it seems like Gates sold his shares at the right time, since the stock is down by over 20% since then. Right before Microsoft went public, Gates owned around 50% of the company. If he did not sell his stock back then, his net worth today would be around $1 trillion, or $1.5 trillion when Microsoft valuation rose to $3 trillion at the peak of the pandemic. But he chose to sell his Microsoft shares to invest in more stable assets such as land, railways, and real estate. Who could have predicted that Microsoft will be so successful? He's not alone who has been selling off their stocks lately. The pandemic was one of the greatest periods for tech stocks ever, and Bill Gates predicted the pandemic 5 years before it happened, where he mentioned in an interview with Vox that a global pandemic is the greatest danger that humanity is facing. So he has definitely predicted how governments will most likely react in such circumstances and prepare themselves to get the best advantage out of the pandemic. According to whalewisdom.com, first quarter Form 13F filings showed that investors sold almost 3 times as many shares as they bought. Mark Zuckerberg sold Meta Platforms Inc. stock almost every weekday during the entire year of 2021. In 2021, Pages sold around $1.8 billion of Alphabet stocks, and Brin around $1.7 billion. It was the first time either had sold shares since 2017. Jeff Bezos, the world's richest person, has sold more than $9 billion in Amazon stocks. Elon Musk, world's richest person, sold around $12.7 billion worth of Tesla shares. He even tweeted a poll whether he should diversify his portfolio or not. America's billionaires have sold $43 billion in stock this year, more than doubling their $20.2 billion total in 2020, according to the Bloomberg Billionaire Index. That's much more than the $6.6 billion they have sold in 2019 or $7.2 billion in 2018. Timing the market is of course almost impossible, because the number of factors that influences the markets are sometimes difficult to track. Who could have known that the moment the pandemic reached the US, the S&P 500 would drop by over 30%? But the last 2 years have been so unique that tech billionaires couldn't just keep watching their stocks rise so much without cashing out. The only problem was that no one knew for sure to what extent the Fed is going to go before it raises the rates. The massive sell-off began back in 2021 when concerns about inflation have been rising. By the end of the last year, investors already dumped some stocks like Netflix. Many exited their positions, but the Fed hung on a little bit longer to the 0% rate. However, beginning of March 2022, the Fed made it clear that it is going to crush the market and bring it down together with inflation. And since then, anyone who doubted the future also began massively selling off whatever they could before everything crashes further, which is exactly what happened. The sell-off is probably over, but stocks will most likely keep declining for a little longer, especially when a recession is expected, since Fed policymakers said that they expect interest rates to climb to around 3.4% by the end of this year, up from 1.9% they were projecting in March. A rise in interest rates makes future cash flow less valuable, which lowers the overall value of companies, especially tech companies that are focused on bringing cash in the future. I'm not sure if the Fed's plan to keep hiking the rates will fix inflation, since inflation is driven by other factors like rising energy prices due to Russia's invasion of Ukraine and supply chain problems, but it seems like the Fed wants to lower the demand to the point where it matches with supply. But not everyone agrees with Fed's policy, since the focus should be on fixing the supply chains and not crush the demand. I guess we'll have to wait and see how everything will unfold. Thanks for watching, and see you in the next one.